Alright, so in this video I'm going to go over two main topics, and they're kind of unrelated, but they're such short topics that I just need to put them both in the same video. The first is standard deduction, and then the other topic is interest and dividends. So let's start with standard deduction. Standard deduction is the concept that we get to take a certain amount away from our taxes, or from our taxable income. So from the basics video, I talked about how we have income and then we have deductions, and deductions are going to reduce our income to get taxable income, which we use taxable income to figure out how much tax we're actually going to pay. Okay, so the more income we have, the more taxes we pay, but the more deductions we have, the less tax we pay. So deductions in general for the taxpayer, for the client, is a good thing. So we always want to try and, take all the deductions that we are allowed to take. Standard deduction is we take this deduction, no questions asked. We don't have to prove anything. We don't have to, make any claims. We just get this, you don't, regardless of your situation. Everyone gets to take this much off of their income before they start paying taxes. And so the amount varies depending on your filing status, which is one of the reasons making sure you pick the right filing status is pretty important. The first category is single/married filings separately, and their standard deduction is $13,850. Okay. The married filing jointly or qualified surviving spouse, you're just doubling it, one for each of you. And the thing with qualified surviving spouse is that you get to take that deduction even though your spouse has passed. Head of household, they get a slightly higher deduction than a single person, but not quite as much as a married filing jointly couple. Okay, so a head of household, they're just going to pay about a little bit less in tax because they're going to get that $6,000 or $7,000 of taxable income less than a single filer would. Okay. Other than just these numbers here, there's also, in addition to this, you can increase your standard deduction if one of these two things apply, and that is if you are blind, if you're legally blind, or if you're over 65 years of age. So if you're blind or over 65, your standard deduction is actually a little bit higher. The way to calculate that is not as clean cut as it used to be. It used to be just like $1,000 or $1,500, but now it's not quite so clear. So let me show you what I mean. If you look in your resource guide, tab F is for your deductions. This is mostly about standard/itemized. And the first real page, F3, is going to show you the standard deductions. Here you just showing what I just showed you, the three different levels. But on the next page, on the back of it, F4, is for if we are blind or over 65, your standard deduction changes. So if you are one of those things and you are single, here's your standard deduction is $15,700. If you're married filing separately and you're blind, then it's slightly different. It's $15,350. So it's a little weird. It doesn't correlate very set way. It's not like just add 15 or anything like that. So you really need to use this chart to figure out how many of these they have. And so, for instance, if you're married filing jointly, one of you might be blind, and that's it, and then that would be $2,920. But if one of you is blind and one of you is over 65, then you could be, you would have two of those four different types of things you could be, and so it's $30,70. Or you both could be blind and you can both be over 65, and so your standard deduction would be $33,700. So it just depends on how many of those, check boxes you're checking up here as far as your age and your blind status. Okay, going back over to here. So that's the gist of standard deduction. Advanced testers, you will have more to this on the advanced video itemized deductions. As far as for the basic return though, the basic tax exam, all you have to know is how to kind of find that answer of how much their standard deduction is, and especially if they are blind or not. Moving on, interest and dividends. So interest, we kind of know that term pretty obviously. That's from loan. You gain money from loaning money to someone else. And then dividends is from owning stock. It's the profits paid to the owners of the stock. Okay, and so these are both income. Both of these two things are considered incomes, and they add into your taxable income. Interest is only considered income if it's not. It's generally considered income unless it's tax-free. Okay, there are some non-taxable interest, and usually that comes from municipal bonds. Municipal bonds. Oh my goodness. Okay, there we go. So municipal is like state and local government. So if you loan money to a state or local government, then the interest on that is generally tax-free for the federal level. If you loan money to the federal government, that interest is still taxable. It's only the state or local government that they give you an exception from. And so the form that reports this income is 1099 INT for interest. Anytime you see 1099, 1099 means we are receiving money. We, the taxpayer, received money. Okay, and then for dividends, that is going to be on 1099-div. D-I-V. Once again, 1099 saying that the taxpayer received that money. Okay. There is what's called ordinary dividends, and then there's qualified. Ordinary dividends, that number includes all the qualified dividends as well. Okay, qualified just kind of sits to the side as a different number saying, hey, this portion of ordinary was considered qualified. And the reason we care about this is qualified gets taxed at a lower rate. So qualified dividends gets taxed lower rate. There's the tax the same as a capital gains tax, which makes them slightly low taxes. Alright, well that is it on this video. Let me get you the question numbers. Alright, for the basic exam, standard deduction is number 2 and 14. So for basic, it's 2 and 14. And then for the dividends, it has a question in there, and that is question 19. Alright, and then for advanced, question 19 for standard deduction. Alright, so at this point go answer those questions if you have not already.